This is a joy. Right now, we're going to go down memory lane, which was that long ago and far away with a guy named David Malpass, who's got a job in Washington right now holding up a bank. There was, at Bear Stearns, absolutely definitive emerging market coverage. There was something about it in the air, in the pixie dust, and Kathryn Rooney Vera was part of that. She's chief market strategist, head of global macro research at Bolta Capital. I've got to go back to Emmy Shio and David Malpass and all of it. What was it like? Is Bear Stearns literally, in my opinion, invented EM coverage on Wall Street?
Well, thank you for that kind introduction, Tom. And Bear Stearns was fun. It was a great place to work, and really I miss it. But EM was a strong point. David Malpass, John Riding, Emmy Shio, as you mentioned, some of the heavy hitters. I was in emerging market fixed income research. And so enjoyed that time, yes.
But, it was a different battle. But then it was EM connected to the central, as Bill Rhodes would say, the central banker to the world. Is Jerome Powell right now the central banker to Emmy Shio's Latin America or the Pacific Rim? What's the power of our central bank leader now?
Well, emerging markets do very poorly in a Federal Reserve hiking cycle with the dollar appreciating in value. So that's why we saw emerging markets get devastated last year. And I think, Tom and Lisa, that's why we've seen emerging markets be the new darling year to date. It was one of the worst performers in 2022, and it's one of the top performers this year, precisely because it seems the Fed is maybe going to stop pretty soon. I still think it's a bit early to jump into that trade. I think that the momentum could carry us higher for the next month or so. But the Fed could do more, and more than the market is currently anticipating, as your guests have ad nauseum mentioned. But there's a certain euphoria, I think, right now for the riskiest paper and for the mean reversion trade.
Euphoria. Can you build on that? What is driving the euphoria other than just, I guess, positioning squeeze?
Yeah. I was talking with your previous guest in the green room, Winnie, and she called it, everyone's jazzed about the China reopening trade. And that's fantastic for emerging markets. China is a very important trade partner for Latin America, and it's very important as well for Asia, ex-China, right? So as China reopens, the surrounding areas, Malaysia, Thailand, those areas are going to get a bounce in tourism, and Latin America is also going to benefit. So I think there's that aspect. A weakening dollar is very favorable for emerging markets. Economic growth this year is going to be stellar in emerging markets. India, more than 6% growth. China is going to lead the growth. And that's going to be positive versus the developed markets. We're here in the U.S., in my view, we're going to be flat at best.
Well, but so do you think that, just to sort of put something concrete around this, do you think that right now the China reopening has been fully priced and even overpriced when it comes to how it's been represented in emerging markets, just riskier assets in general?
Yes, and I think that before I recommend going long on a sustainable fashion to institutional or even retail investors, we do have to see a pullback, a correction in risk assets. I think U.S. recession is not priced in, particularly in the equity markets, and we have not seen difficulties with financing. There's a lot of names in the emerging space, as well as in high yield, that have not had those financing difficulties that I do expect to come to the fore as we feel the repercussions and the ramifications of 500 basis points in tightening in more than a year.
Two things right now, very important. You're lecturing at the University of Miami, and you're going to tell them we just had a new depth of inversion on the 2-10 spread, negative 85.298 points. The 3-month 30 is at 107. It's not through to new depth yet, but there's the vanilla spread. What is the signal of new deep, substantial inversion?
Yeah, it's been really fun to be an adjunct professor at UM teaching global economics, especially, Tom, in this time in our lifetimes. Look, I'll go back to emerging markets again. They did their homework. Brazil increased rates more than 1,000 basis points last year alone. So I think that's part of the euphoria, plowing into these countries, these names, these geographies, these asset classes that are very juicy in yield.
Okay, I've got to ask Lisa. Lisa asked for me as well. Both of us tried to price a condo in Miami the other day and fell off our chair. You're living it. You're living the Florida boom.
I'm a beneficiary of it.
You're a beneficiary of it. Okay. Give all of our listeners and viewers worldwide a snapshot into the sustainability of the Florida boom. Can it continue?
The good news is that we have diversity both in, the diaspora from New York, New Jersey, and from Latin America. So all those people are coming. So it's not just the New Yorkers that certainly have bid up, not just my house price, Tom, which has jumped significantly in value, but also the wait list to get into schools. It's very difficult now to get into the private schools because of this influx. I think it is diverse. I think the mayor and the politicians there have done a fantastic job of enticing capital, and it's diverse in nature. So I don't envy you looking at real estate in Miami. I'm one of the New Yorkers that moved down, but thankfully 15 years ago,
Lisa,
when Bear
4
Stearns went
bedrooms,
under.
3 bathrooms, and there's grass coming up through the driveway.
Yeah, we have a yard.
$2.5 million.
Basically,
Yeah,
the most interesting thing that
It's
you've
stunning.
said in the, not Florida real estate. I'm still looking at the 210 spread, which shows you how much of a nerd or whatever you want to call me. But I'm watching right now equities rally, continue to extend the rally, even though people pile into 10-year treasuries at a time when they're expecting more rate hikes. This doesn't add up. Do you understand this, Kathryn?
No, and I think Victoria Fernandez said it very well. It doesn't add up. And so that's why I like T-bills. I've been saying this for an extended period of time. In fact, here on Bloomberg a couple months ago, 4.7%, 3-month, 6-month T-bills. It makes sense to me. I think it's a good idea to be in cash and cash equivalents. Some of my top picks in the equity space last year I continue to like, which are staples, underperformed this year, utility, energies, and healthcare in the equity space. And I think we do need to remain defensive under the expectation that this can't continue, right? We can't have record low unemployment in 53 years, productivity really kind of dismal, and labor costs still rising with the Fed getting to its 2% inflation target.
We're going to have to see. Thank you so much. Kathryn Rooney Vera
Thank
with
you.
us on
Pleasure.
Voltec.